thank you for taking the time. We are recording this for our Swedish viewers because we are launching the translation of your book,
Yes,
Guide to
thank you.
Invest in Gold and Silver. I think the viewers in Sweden don't really know about you that much and your background. Can you please tell the viewers your background and how you got into gold and silver and education?
Okay, well, basically I'm a serial entrepreneur. I've had numerous businesses and I don't have any degrees in economics or anything, but I really fell in love with the subject of global economics and monetary history back in the year 2000, 2001, when I had a financial planner helping my family out, and he lost about half of the family's assets, and so I took control of it away from him and started studying everything myself, and I came to some very different conclusions. Everybody on TV and on Wall Street was pushing one thing, one set of beliefs, and I could see that the world was, that there was some bad things that were going to happen out in the future from all the things that we were doing to the currencies around the planet, and especially the United States with the huge deficit spending and so on. And so I started studying it full time, and you know, back even in 2002, in 2001 I was studying it. In 2002 I started purchasing gold when it was $300 an ounce. By April of 2003 I was so convinced that I was fully in it. I had moved all investments to just gold and silver and mining stocks. And then in about 2007, 2007 or 2000, early 2008, I started studying the difference between mining stocks and the metals themselves, and I found that the metals, just the bare metals, outperform the mining stocks sometimes. And so I moved into just precious metals. It's my only investment, it's my business, and I wrote the best-selling book on the subject. So that's my background. Is I'm actually very self-educated. I'm dyslexic, and so I did not do that well in school. But I have a passion for this, and that is the reason that I did well in it and was able to write this book. Also, Macintosh came out in their operating system. When they came out with OS 10, the new Macintosh operating system, in the operating system, there's a program. You just highlight the text, press a button, and the computer will read to you. And so that happened at about the same time that I needed to read a whole lot of stuff. And so I've been able to read dozens and dozens of books on economics and monetary history and so on. So that's my background.
Thank you. And when the viewers hear you investing in gold for like $300, $400, and as everyone know, gold has just increased tremendously in value, people could ask, is it too late to get into gold and silver today?
Absolutely. I believe absolutely not, because I still buy gold and silver all the time. Whenever I've got excess cash, I buy gold and silver. There's three phases to every bull market. The stealth accumulation phase, when big smart money gets into it, but the public doesn't hear very much about it. That's the first phase. Then you've got the second phase, that's usually the greatest gains and the longest in duration, and I believe that just started. It started once gold broke $1,000 an ounce or so. So the transition from the first phase to the second phase really took from late 2008 to early 2010. But we are now at the beginnings of what I would consider the second phase. And this is where you start hearing about it more on the news. You'll see different types of investment vehicles created for it, different mutual funds and things like that, different ways to invest. It's also when a lot of the snakes come crawling out of the woodwork. This is when a lot of crooks get into this and they try to take people. So you really have to be careful. That's one of the reasons I suggest that people buy my book. There is a chapter called Beware the Pitfalls. It's a chapter on all the things you have to watch out for, because there's a lot of ways that people are going to try to sell you something that mimics gold's price, or they're going to try and sell you overvalued gold if it's a collector coin, or some derivative. And I've got a saying: if you can't hold it, you don't own it. So I believe in coins and bars either in your own possession or in what is called a segregated storage account, where it's at a depository that specializes in storage like this, that has no interest in gold or silver. The only thing that they do is they rent very secure space, and that's all they're interested in, is the storage fees. And it's fully insured, and we do storage accounts for people at my company, goldsilver.com. But so the second phase, we're in that now. I believe we just started this phase. In the book, I was predicting $7,300 silver, but that is a moving target. It depends on how much currency governments around the world, especially the US, create. And when all these bailouts happened to bail out the banks when the markets crashed back in 2008, they've created so much currency that it now takes $15,000 an ounce gold for the value of the gold at the Treasury to rise to match the value of the currency in circulation. It did this in 1980, it did it in 1934, and all of the evidence that I've got suggests that this is a process that has been going on and repeating for 2,400 years, since the first great inflation in Athens in 407 BC. Gold and silver do an accounting of how much currency is produced as the public wakes up and they realize that their purchasing power is going down because of inflation, and they rush back to gold and silver to protect their purchasing power. They bid the price up until the value of the gold and silver in that country matches the value of the currency that's in that country. And so that would require like $15,000 an ounce gold today, but that, like I said, that could change. But I believe we're at the beginning of the second phase, and then the third phase is when the uneducated investor rushes in, the general public, the people that aren't paying any attention to finance. They just see everybody else getting rich and they want theirs, basically. So they rush in at the very end. Those are the people that always end up getting slaughtered. They rushed into the tech and dot-com bubble in late 1999 and early 2000, and they lost on that. They started flipping homes in the United States in 2007, and they lost on that. And so that'll be the third phase. It's a very short duration, but spectacular gains, and we're nowhere near that yet. So I believe we're still early in this bull market. There's plenty of time for people to get in on this. And the one thing I really love about this is this happens in waves and cycles, where gold re-exerts itself, and when people rush back to it, it does this accounting. And during these periods of times, it is usually the best performing asset that there is, gold and silver. There shouldn't be anything else that compares to the types of gains that are going to be made with precious metals over this coming decade here, or it might be shorter. 3 years to 8 years, I expect that this will still go on. But the gains should be spectacular compared to anything else. But there are these rare moments in history where the safest asset that there is, the only asset that has not failed in 5,000 years, it's been the safe haven that people rush to whenever there's crises, whether it's currency crises or political unrest. People rush back to gold and silver to protect themselves. There are these brief moments in history where it's also the thing that has the single greatest gains in purchasing power, just like it was back in the 70s bull market, 1934, and like I said, hundreds of times throughout history. So it's also the easiest portion of this cycle. You know, there's certain portions of an economic cycle where real estate is the best thing, other portions where stocks are the best thing. When precious metals are the best thing, it's easy because you buy them and you sit on them until they're overvalued, and then you sell them. So there's only 2 trades involved, and you don't really have to know all that. You don't have, with real estate, I mean, you've got to really study to be successful at real estate investing, to not lose money at it. In the stock market, you know, you're up against a bunch of traders. Things are going up and down, and those traders really know what they're doing. And most of them are sharks, and they can take your money very easily. Gold and silver, you can have it at home. You just wait until the rest of the crowd is finally rushing into it, which they are not yet. When everybody is telling you got to buy gold and silver, your neighbors and stuff, that's the time you got to start thinking about selling it. And at my company, we believe we can measure a lot of these things because you can see it in cycles when you price things like real estate, oil, stocks in gold. You see that there's a cycle to where gold is either overvalued or undervalued or overvalued. And right now, it's still fundamentally undervalued. It's just coming off of its bottom.
Mike, you have your website, goldandsilver.com. That's really an educational website. I mean, you're selling, you're an entrepreneur, you're an author, and maybe foremost an educator. Tell us about your website and what kind of information the viewer could find there.
Well, there's a whole lot of videos on there. There's newsletters. We have a new website coming out called wealthcycles.com, and that's about these long-term cycles of different investment classes outperforming. You know, you can't have, like, for instance, when real estate is going up faster than other things, faster than stocks. Well, that can't happen forever. One thing I've found by measuring stuff with other stuff, when you measure your house in how many barrels of oil it's worth, in other words, if you sold your house today, how many barrels of oil could you buy? How many ounces of gold, tons of iron, pounds of wheat, pounds of sugar, bushels of wheat, ounces of gold, whatever. If you measure stuff with stuff instead of using currency, we don't print gold. We don't print wheat. They print currency. It just comes off a printing press, and the quantity is always increasing, where the quantities of these other items measured against each other is fairly stable. So what you see is that if you measure your house in barrels of oil or tons of iron or shares of a stock index like the Dow Jones Industrial Average in the United States, or ounces of gold, you'll see that your house goes from undervalued to overvalued to undervalued to overvalued, and whatever you're measuring it with is doing the exact opposite wave.